Welcome back. In this video, I want to talk about high interest savings account ETFs and money market ETFs. These are fairly new investment vehicles that really gained traction after the pandemic when interest rates began to soar. And these products offer a very safe way to earn higher interest than you would if you invested your money into a bank's high interest savings account. Basically, how these funds work is that when a company offers one of these products, people will put money into it, lots of people, and then the company is able to approach a bank, one of the big banks in Canada, and say, listen, I have millions and sometimes even billions of dollars of assets under management. Can I put this in a high interest savings account with you? And would you offer me a higher interest rate than you would an individual that doesn't have this much money? And of course, banks will say yes. They're able to give the company a slightly higher interest rate because they have all of this money coming into the bank. So why would you invest in these instead of a regular high interest savings account? Well, actually they operate exactly the same as high interest savings accounts through a bank. They're safe, they're great for short term if you don't want the volatility of the stock market because you're afraid of the market going up and down. If in the next 1 or 2 years you have use for this money and you don't want to lose any of it, then you want to park it in somewhere safe, and these high interest savings accounts are great for that. I know a friend was opening an FHSA, a first home savings account, and she had plans to purchase a house within the next year, and so she wanted to park her money in a safe space so that she didn't lose any of that money to put down for down payment for a house. And so she opened an account with Questrade and FHSA, and she, instead of putting into the stock market, she just bought some high interest savings account ETF, and that allowed a very safe way for the money to increase in value over the very short term. So let's look at some examples that I have here. So here are 5 HISA ETFs, high interest savings account ETFs. I just used CASH, HSAVE, CSAVE, HISA, and PSA as examples. I've got 4 money market ETFs here: ZMMK, MCAD, CMR, and MNY. And going back to the HISA ETFs here, you can see that the inception date here is 2021, 2020, 2019, and 2013. So the one on the right is a lot older than the other ones. And you can see here at the distribution yield here, this is exactly why people like to invest in these products. They're offering about 4%, a little more than 4% interest rates. It's hard to find that at a bank right now. I know with the drop in interest rates, Wealthsimple and EQ Bank just emailed me and said they were lowering their interest rates. It's well below 3% now. Neo Financial is holding on steady at 3%, and that's the highest I could sort of find out there right now for the banks. And these are still offering over 4% as an interest rate. You can see some longer term data here. You can see that some of these have been around for about 5 years, and they've been given an average about 2.7% over those last 5 years. You can see over the shorter term, the 1 year is over 4%, 3 years is over 4%. And that's because interest rates have gone up after the pandemic. They are starting to fall now again, and these interest rates are also following that drop, so they are getting a little lower as Bank of Canada lowers their interest rates. And you can see the asset allocation here. They're all 100% cash. And here are the holdings, and you can see their holdings here: National Bank cash holdings, Scotiabank holdings, CIBC cash holdings. Again, these are just investing into another bank's, one of the big banks' high interest savings accounts for the most part. You can see there's some government bonds in there as well for some of these, but for the most part, you are investing in a high interest savings account just like you would be at your bank. And looking at the money market ETFs here, again, the yield is slightly higher for these over the HISA ETFs. You can see there the number of holdings is significantly higher. I'll show you those holdings in a second. You can see they haven't been around for very long either. The oldest one here, inception date, is 2021. Again, not a lot of longer term data here. You can see the 3 years about that 4% mark, just like the high interest savings accounts, ETFs. These are very similar products to the HISA ETFs. You can see the holdings are slightly different, not a lot. Most of it is in cash. There are some with some more bonds in there. You can see some of the holdings here. You can see that we have some municipal bonds, Montreal City and Alberta Province, and we've got some Enbridge pipeline bonds in there on one of these as well. So again, these are extremely safe vehicles. One con against them though is that these products are not CDIC insured. If you put money into a bank, into their high interest savings accounts, you will be insured up to $100,000. So if a bank goes bankrupt, you have less than $100,000 in there, you will be insured for up to the $100,000. With these products, you are not insured. But again, you saw the holdings. Their holdings are with CIBC and Scotiabank. These are extremely safe banks in Canada. They're not going anywhere, so I wouldn't worry about that. One thing to note as well, if you do invest these in a non-registered account, the interest rate does count as interest, not as capital gains. So the interest is taxed unfairly. It counts as income, basically, just like your job. You will be getting taxed at your marginal tax rate. So if, for example, I'm at the 30.5% tax rate, and so if I earn $1,000 with these accounts in interest per year, then I'm going to be taxed $30.5 for the upcoming tax year. The one exception is HSave here. Global X actually does something a little bit different, and they're able to reinvest their interest. And when it comes tax time, they actually tax it as a capital gain rather than interest. And so that's taxed more favorably. If you've seen my video on non-registered accounts, they have put a suspension on subscriptions on HSave right now. You can't even actually buy it. They're looking for the AUM, the assets under management, to go down a little bit before they allow more people to buy that product again. So I hope this video has shown you some advantages of investing in these high interest savings account ETFs or these money market ETFs. It's an extremely great way to invest in a very safe and liquid manner. Great for short-term savings. Instead of putting your money into a savings account in your bank earning whatever they're offering, maybe 2%, 1%, these are giving you 4%. Extremely safe products, higher interest rates, easy to purchase through your brokerage. If you've enjoyed this video and would like to stay informed of some of my other ones, please subscribe below and have a wonderful day.